Hi everybody and welcome back to the channel. It's been about a month since I last posted and life just got in the way and I did get sick, but now I'm back with a pretty big update, so this will be a longer one than usual. The portfolio value is at 29,397.02. RRSP is in the green and now the TFSA is also in the green since the market has been doing very, very well in the last month. In fact, you're going to see a lot of my gains have come from just a short period of time, which really stresses the importance of being always invested because you really never know which direction the market is going to go in a short time period. And I consider that to be, 2-3 years. I'd consider that a very short time frame. And the portfolio did receive 2 dividend raises since the last update. So Alimentation Couche-Tard, or ATD, raised their dividend by 25%. They've actually doubled the dividend over the past 3 years, so it's really impressive for this company. And TD Bank also raised their dividend by 6.3%, and that was the highest dividend raise of all the big banks in Canada. So that's why I hold TD and very happy with this increase. So I'll first start with the update in my RRSP since I did make a buy. So it's sitting at 1694.60. It's only up 1%. Not as much change in this account, but the TFSA is a lot more drastic, and I'll be getting into that shortly. Past year we're actually down for the year, but all time we're up 11%. In this portfolio are up 171. We did make a deposit that did kind of drag down our returns. So I did receive a little dividend from Starbucks. I reinvested that dividend right back into the company. And the company that I bought was Vici Properties. So I bought 7.25 shares, really upping my position. They recently had like a very good earnings report. Everything's going well for this casino company. And one thing that is really pushing down the price of this stock is the fact that interest rates are so high, but there are some signs that it might be time that they're going to be lower soon, because in Canada the historical average interest rate is between 4 and 5%. So it stands to reason that if inflation is cooling down like it has been in the past few months, and also there is signs of the Canadian economy slowing down, that does kind of point to the fact that the economy is slowing down. The interest rates are having the impact that they want. And I do have a clip from the Bank of Canada stating how the raise of interest rates has not really affected the pricing of houses in the way that they wanted. Like, it had a little bit of an impact, but not as big of an impact.
We have even lower interest rates, and so we had a real run-up in house prices, on average 50% across Canada. Now, we've had a big increase in interest rates since then, so you would have anticipated maybe erasing all of that gain, but we haven't. And I think, our view on that is what we have is a structural supply problem. So we can move interest rates around, it will have some effect, but really what we need to address is the supply problem. So, again, going all the way back to the dynamics here in this market, we've taken a number of policy actions over the years to affect demand for housing, and we still have a housing affordability issue. So, we are really glad to see the degree of attention this is getting from all levels of government, and we need some coordination on that. We need some action. I think if we can address the supply issue, that's our best route to housing affordability.
And before I head into the TFSA update, please leave a like on the video and subscribe to the channel so you never miss any one of my updates on me building this dividend portfolio so I can build a passive stream of income for financial independence. All right, so the total for the TFSA is at 27,702. The past month has been quite good. We are up 6% in the past month. And then if we go to the all-time performance, we are up 5%, or up $1,400. So we can see that big tech is doing quite well. ATD has been rising a lot. It was practically at $80. It fell down a little bit after its earnings, but not by much. Really, really happy with that increase they did. I purchased 1 share of Aritzia, bringing us up to 44 total shares. So this one has rebounded a little bit. There is some data out there from different retailers that Black Friday was a little bit better this year than previous years. And I think Visa and MasterCard also reported more activity on the credit cards during this holiday season. So it does seem to point that this would be a strong quarter for retail, and Aritzia should benefit from it. But we're going to see that on their next earnings report in January. So definitely looking forward to that and seeing if there's any improvements in the cash flows, especially since their capex into that new distribution center in Toronto is done. So we're going to see if that's reflected in their financials and, just in general how they're doing. And if they do well, then the stock will go back up, but we'll see. And then with Scotiabank, I purchased 1.8 shares of it. I did receive a dividend from them, so I did reinvest that right back into the company. They probably had the worst earnings out of all the banks that I have seen, so pretty underwhelming in that regard. But I'm pretty optimistic about the bank in the long term because out of all the Canadian banks, I would say CIBC had the best earnings report that I've seen out of all of them, and it's a really big surprise. So it stands to reason that BNS could benefit from that in the future. And another thing I noticed in the bank earnings reports was that CIBC had the lowest increase in their provision for credit losses, which is surprising because it could prove that all the other banks are being like a little bit too cautious in regards to that. But, we'll see that in time. So if that does turn out to be the case, then, those banks can take that unused portion of the loan loss provisions if those bad loans aren't nearly as bad as they think that they are, and it's going to come in as profit for the banks. And I started a new position in CP Rail. So I looked at this one again, and I think I was being a little bearish on it, a little bit too much. CNR ran up to the 150 range, and CP kind of stayed flat. And I did look at the CP investor presentation, and they said that they were going to keep their expenses the same for the next 5 years, and that their cash flows would increase significantly over that time frame. So it seems like a pretty great investment to me, because they can use that money to buy back shares, pay off their debt, and they also said that they wanted to lower their debt, lower their leverage on the business. They pay a very small dividend. It's very small relative to CNR. So if you're really dividend seeking, I'd probably say CNR is the better stock for that. But CP could be the better total return stock, since they do have the best railroad in North America, because they go from Canada all the way to Mexico. So I think I was just a bit too negative on the stock before, but I'm happy to get it in because now that CNR has risen in valuation, CP seems like it could grow a lot faster than CNR. So that's why I'm buying that, because it really hasn't shot up like CNR has. So I'll definitely be happy to add this here and there. So I own both railroads, and things are looking good for the railroads. And I also purchased 4 more shares of ENS. So Enbridge recently had their earnings, and they did a dividend raise of 3%. So the underlying business seems pretty good. So no worries here. So I'm just continuing to average down. And then with Granite REIT, I bought 1.25 shares of this. They also recently had a little dividend raise of a little over 3%, and the company's doing quite well despite all the interest rate hikes that we've been having. This company's still performing very well. And then with Intel, they're finally in the green, so we're finally positive on this company. They keep having really, really good earnings reports and beating on expectation, and they seem to be a bit more fiscally responsible and not burning tons of money. So we'll see if that continues. If it does, and their plan works out to rebuild the company in a new direction, then the stock will continue to rise over the next few years. And then with TELUS, I bought 4 more shares going up to 85, and I'm going to be buying another 4 in December. So that'll be the full year of just buying 4 shares a month. So I've really grown this position really large, and I think a nice little goal for next year would be to get this up to 100 shares even. And then with TD Bank, I purchased half a share from the dividend that I received from it, and the bank had a really nice raise. So very happy with this one, and I know it'll climb out back into the green. And then with Tesla, they unveiled their Cybertruck, and it's quite a fast car. with the dividends earned in the portfolio, we were at $2,029.07 all time. So that's a nice little milestone that we crossed. The annual dividends went from $12.31 to $12.88 per year. So nice increase there. The monthly average went from $102.62 a month to $107.34. And the daily average, we went from $3.37 to $3.53. So getting closer to that $4 a day dividend goal. And if my portfolio were to work a 40-hour work week for me at a job, it went from 59 cents per hour to 62 cents per hour. So gonna keep trying to get this to the first dollar. And if we look for my dividends year on year, 2023 is the first time that I've received over $1,000 in dividends in just a single year. It took us less than 3 years to get here. And October was the highest month of dividends I've ever received at 161.47. So nice growth there as well. And then just a little bit of sad news that Charlie Munger died at the age of 99. So he is one of the greatest investors of all time, and he's definitely impacted a lot of people's lives, just as Warren Buffett. He impacted him, got him from investing from, terrible companies trading at cheap prices to high quality companies at fair prices. And the results of Berkshire Hathaway are definitely a testament to what a great investor he was. And I would definitely say that there's a few quotes that Charlie said that definitely had an impact, even on me. So one is that the importance of getting your first 100K. As he says, it's very, very difficult. You have to make a lot of sacrifices, but you got to do it, and then you can lay off the gas a little bit because the compounding is going to really take hold, and that is the hardest milestone to hit, and that is one I'm actively trying to hit. I'm almost at 30K, so I got to keep pushing, and I got to keep investing and staying consistent, and this channel is a great way to do that for me because I have to keep, making these updates and showing you guys that I am investing and reinvesting my dividends consistently and continuing to keep at it. And another thing that Charlie famously said was that the key to a happy life was low expectations, and that's definitely true. I find that to be the case, that when you're have really high expectations, you're often disappointed in your life, and if you don't really expect anything to happen because life, the unexpected happens all the time. You're never like, if anything good happens, you're really surprised by it, and you can definitely appreciate it. But if something bad happens, you had no expectations going in, so I think that's a really healthy mindset to have, just to avoid general disappointment and just have a general sense of happiness. So he had a lot of wisdom in that sense. And I'll just play one clip of him where he kind of shows his love of Costco. I think it's one of the funniest moments that he and Warren Buffett have ever had. So here's the clip, and have a great day, everybody. And, just live your life like every day is your last, because you never know when it's going to come up. And hope you hit all your financial goals or whatever other goals you have going into 2024.
I predict Charlie's going to talk about Costco. Go ahead, Charlie.
Well, Costco, of course, is a business that became the best in the world in its category. And it did it with an extreme meritocracy and an extreme ethical duty, self-imposed, to take all its cost advantages as fast as it could accumulate them and pass them on to the customers. And of course that created ferocious customer loyalty. And it's been a wonderful business to watch. And of course strange things happen when you do that and do that long enough. Costco has one store in Korea that will do over 400 million in sales this year. These are figures that can't exist in retailing, but of course they do. And so that's an example of somebody having the right managerial system, the right personnel selection system, the right ethics, the right diligence, and et cetera, et cetera. That is quite rare. And if once or twice in a lifetime you're associated with such a business, you're a very lucky person.
Charlie and I were on a plane recently that was hijacked.
With what?
It was hijacked. I'm telling about our experience on that hijacked plane when the hijackers picked us out as the two dirty capitalists that they really had to execute. But they were a little abashed about it. They didn't really have anything against us. So they said that each of us would be given one request before they shot us. And they turned to Charlie and they said, "What would you like as your request?" Charlie said, "I would like to give once more my speech on the virtues of Costco with illustrations." And the hijacker said, "Well, that sounds pretty reasonable to me." And he turned to me and said, "And what would you like, Mr. Buffett?" And I said, "Shoot me first."
Yeah. Well.